My name is Juanita Archuleta, and I work here on the NinjaTrader Business Development team. We have a very special event for you today with Jack and Sev of Broz On Bonds. I would like to mention it is important to understand that there are substantial risks in trading commodity futures contracts and Forex. You should carefully consider whether such trading is suitable for your needs and will depend on your specific circumstance and financial resources. It is possible to lose all funds deposited with your broker and could even incur losses beyond these amounts. Please inquire at the following link for more information or for a full copy of the CFTC risk disclosure. Also, please remember that these training webinars are not a solicitation nor a recommendation, but simply educational in nature. This presentation is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage directly at the following phone number or by emailing them directly. We are excited for this unique event in which Jack will cover eliminating emotions from trading and also provide ideas for trading the treasury bonds, treasury notes, and E-mini S&P 500 futures. Thanks again for your attendance, and without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Jack. Please go ahead and take it away, Jack.
I did see a lot of you are looking for education, and I thought, well, that's nice to see. I've been a member of the Board of Trade since 1996. I left there in 2014. I've not been back for a year. I am still a Board of Trade member, but I think most of you know that except for the S&P futures and the options, everything else is gone. So I trade from home now. The one thing that I've learned, I started this business as a side business, I think back around 1999, maybe 2000, because when I first started to trade, I wasn't a good trader. I was a good analyst. I could figure out support resistance levels, market bias, but as far as trading, I was bad. And seeing that most of you are looking to increase your education, I'm thinking good. There's people out there trying to tout these programs, buy this and you'll make money, and buy this and you'll make more money. I got to say this is very, very difficult. And as trading has left the pits and gone more and more to the screen, and I talk about that in a gradual way, but every 6-7 months, you just see that the market is getting harder and harder. I find that everything I've learned and some things I forgot, I'm using in this market. So again, the demands of this to try and be successful, and I guess you can't say make money because people, oh, you can't talk about that, but face it, we're all in here because we want to make money. All right, it's very difficult, but if you can learn some tools, if you can be patient, if you can have discipline, yes, it is possible. Now, what I want to do is try and go through a few things that hopefully are going to give you some things to think about. Maybe they're going to help you in tomorrow's market. So you can trade that jobs number. You can get Seb's email address. I didn't talk about Seb yet. I'm in Chicago here. Every time I talk about is Central Time. Seb's out in California. I set up an office out there. I do spend some time out there. But while I'm a hands-on, I start trading in the morning just past 6:15 Central, and I'm not done until just after 4. And it's basically in the room all day, and I scalp. I scalp treasury bonds, I scalp 10-year notes, I scalp 5-year notes, and of course the S&P 500. He's an option trader. He built our systems. He runs the systems. So I tease him. While I'm in here up to my neck sometimes trying to figure the market out, he's sitting back there in sunny California watching the systems run. But they'll have his contact info because, face it, he's got more time than I do. So basically, what we do in the trading room, and I mention this because you guys that have done well, you're able to successfully compete in the markets and you do well. I can be another set of eyes and ears for you on the market. I can be a filter for you. My trading room is not one of these rooms where I'm the so-called expert and I call out trades and everybody takes them. It's not that kind of room. I'm another set of eyes and ears on the market for you. So what we do, when I start in the morning at 6:45, and I've already done it myself because I sit down before that, but I look at the overnight trade. And I just kind of see the way it held up to the homework I did the previous night. I believe that's a big part of trading. And I put my homework out in the shape of a newsletter with my levels, my pivot, my support, my resistance. Now look and see how the overnight held up to those levels. And as we're doing that, we have 4 or 5 setups that we use to find trades. We talked an overview of it to keep emotions out of the market, and that's how we trade. We have 4 or 5 setups that I learned these on the floor 15, 20 years ago, but they repeat themselves throughout the day. And we just try and keep ourselves patient and wait for those setups. Now, some of those setups we identify when we first sit down at 6:45 in the morning. And we can park those trades in the order book, put our sells and buys in. So that's the first thing that we're doing. Okay. Then we just make sure we're in tune to what numbers are coming out. This market is not trading numbers like the market's used to. I mean, yeah, tomorrow's jobs number is going to be it's going to move the market. FOMC decision the other day was something to be concerned about, but most of the numbers aren't really a factor anymore. This market's got some bigger things it's dealing with than the factory order numbers and Philly Fed and things like that. But we still want to kind of review what's important and what to pay attention to. I have a handful of associates on the floor still in the option pits, and they'll pass on to me, and I pass on to my clients then levels that they're looking at. And again, I stress that it's not, these are levels that these guys come up with: support, resistance, places in the market where there might be a transition, it might flip from bullish to bearish. I got to say, in all my years of being on the floor, that's how people trade. And my clients, for example, might look at some of the floor stuff and see what lines up with things from my newsletter. And then ideally, maybe those levels are close together, and then maybe a setup lines up with them. And that should be a place that should give you a pretty good chance for the trade. Now, is that trade going to be a winner every time? Of course not. I mean, you're going to have losing trades. But if you can at least identify a spot that 2, 3, 4 things are saying, this could be a spot to do something, at least it gives you the confidence to put in the order and try and get filled and see if see what it does for you. So that's kind of the gist of what we do in the room. Now, this is why I think the room, well, I think it's good because it's my room. But these are some of the things. All right. And believe me, I'm not talking all day. I mean, there's a lot of times I don't see a thing for half an hour. my job's to watch the market and look for little clues in the order book, the dome, the charts. And as I said before, no set of eyes and ears in the market for you. But you guys that are pros and do well, again, another set of eyes and ears for you. One of my clients said, even the best baseball player has a coach. The best hockey player has a coach. But I don't look at myself so much that way. But is there experience coming from my end that maybe can give you some other ideas and help you through a bad trade, or maybe help you into a trade and help you hold it longer? There is. The approach that we take to trading, I touched on this earlier. I mean, we'll sit there and wait until a setup gets hit, or a level gets hit, or something in the chart that we're seeing gets hit. And sometimes we're just sitting there. I mean, and sometimes I look outside, a beautiful day, and think, I should be outside. And, what am I doing this for? But this is my living. I mean, I trade. That's what I do for a living. So it's you have to just get the things you're going to take advantage of, wait until those things happen, and act on them. And one thing that I've seen over the years, and as the floor was closed, I had a lot of the pit traders coming to me to try and help them learn how to transition from the pit trading to the screen. Well, the pit traders would make 100 trades a day, and more. I had one guy who was trading S&P through me, and on the screen, he was making 500 trades a day because he was used to that in the pit. Well, it's a different game on the screen. It's a game of discipline and patience and waiting for information that you understand to line up and point that this is a place I should do something. By being in the trading room, you can read the newspaper and mess around, because you're going to hear me bring you back to the market. I mean, can you lose focus when the markets are quiet and not doing much? Of course. But if I could help to bring you back the important points, hey, we're getting close to that support in the S&P here. We talked about this earlier. We're getting down to 13. Let's put some buys in. Or hey, here's our level in 5 years. So it can help you to, and I have heard over the years, as I've talked to different groups, people tell me, well, you're different, meaning me, because I've traded for a living and this is what I do. And they say people have a short attention span. So if this can help to keep you clued in to where the action is going to happen in the S&P or bonds or something, it's going to help you. Now, because I show every trade I'm making shows up on the charts, but I explain why I'm taking the trade, what the reasons are behind it, or I'll tell the reasons behind it, but I'll say why I'm not taking it. Sometimes I've had a bad day, and I just want to look for a better trade. Sometimes I think that it's too early in the day, and I want to wait a little bit until the day unfolds. But again, it's a filter for you guys to say, okay, well, he likes the trade, So, I mean, every trade I take, you're going to know the reason behind it. You're going to know what I'm looking for a profit. You'll know where I'm getting out. You'll know if I'm going to work the trade. We call it a lean and on the floor. You'll know that spot. But this helps you then to look at a market and be able to figure out places where you want to avoid trading, places that you want to trade. And believe me, I mean, this stuff is 5 days, well, it's 4.5 days a week. I work a short day on Friday. That's my prize to myself. But you can hear the same thing over and over and over and over every day. And just by that repetition, you're going to say, okay, that's the setup, or that's how to use the dome. So it's going to help you guys in that respect. Now, this goes back to the emotion thing. And I mean, I got emotional, I think, once today. And that's when I came in here to do a mic check. Because I'm not a technically savvy guy. We tested the mic on Tuesday, it was fine. And today I must have missed a button or something, it wasn't fine. But you want to keep emotion out of your trading. That's where I also saw that from the floor guys. They were so used to being active, and when they weren't active, they would just trade to trade sometimes. Or if they had a losing trade, they would just start clicking. And that's what they told me. I just start clicking. Well, there's a different game now on the screen. So you have to tell yourself, I'm going to have losing trades. I mean, and again, you probably have heard, especially you newer people, oh, no. You'll be a multimillionaire. This is very difficult. All right, it's very difficult. You are going to have losing trades. All right, you're going to mismanage trades. I mean, I've had trades and it's a battle. But I've had trades that I've got into them, and I've told myself I should buy a few more here. This one's going to be good, and I don't. And I get out of my usual spot, and next thing I know, it's 4 or 5 ticks higher. I was buying it, and it keeps going. I've taken trades where I'm thinking this thing is going to the moon, and it goes past where I usually would take a profit, and it comes back, and I scratch it. So it's part of the game. I mean, you could take any sport analogy you want. I mean, you get a baseball player who hits 300, and you got a pitcher who's a bum, and the batter knows that this pitcher who's a bum, when he gets behind on the count 1-2, he always throws a slider, and he throws it on the outside part of the plate, and the batter knows it's coming, and he sees it, and he misses it. I mean, it's part of the game. You're going to miss trades. I mean, one thing we're big on is parking stuff in the order book early. And you go down, it goes right to your price, and they trade a few hundred, and you're not filled. It goes to your target price, and they trade a few hundred, and you're not filled. You sit and wait and sit and wait and sit and wait, and then you say, you know what, I'm going to get lunch. And you walk away for half an hour and come back, and the trade you wanted happened. That's part of the game. I know it's on here later, but what I tell myself all day, the market's job is to keep me out of good trades and get me in bad trades. I learned that from a floor guy years ago. The market's job is to get you into bad trades and keep you out of good trades. And when I have a trade like that happen to me, that's what I tell myself. And yeah, you're going to sit through quiet, dull markets. People misread the bond market. It's amazing how much they misread it when I talk to groups. It's a fantastic sector to trade. You got the 30-year bond, which has a lot of risk. I put it on the same risk as the S&P 500, the S&P, the mini S&P. A lot of risk. You get bang for your buck, but a lot of risk. You get the 10-year notes, which doesn't have the movement, but doesn't have the risk. And then you have the 5-year notes, which has very, very low risk. You guys are looking to fund an account, or you're funding an account with a smaller amount. The 5-year notes and 10-year notes is a real good fit. But we have seen some extremely dull financial markets, and this seminar isn't to talk about the reasons behind that. But we've been making a lot of trades right now in the S&P, the mini S&P. Today I made 6 trades aside in the bonds, and I made 18 aside in the S&P. And usually I'm more spread across the board. I made none in 10 years. I made none in 5 years. But if you can remind yourself of some of those points, then you won't get frustrated. And that's an emotion that usually causes a trader to lose money. Frustration, anger, boredom. So we talk about sticking with the process. And I mean, I have come across this so much in my reading, and you listen to a great coach. I mean, again, now the Cub manager, this guy Madden, I think he's a good manager, and he always talks about the process. If you play the game right, the end result's going to be there. And that's another thing about trading. And I was told this by a pick guy years ago. If you're trading for money, it's not going to work. Now that might sound stupid, but think about it. And some of you guys that struggle, if you think about why you struggle, I mean, I know part of it's because the way you're trading isn't conducive. I mean, believe me, I've been around this enough to know there's a lot of nonsense out there. But you also, your first thought is the money. You're filled, and your thought is, oh my God, I'm in. Now I might lose $100 here, and I make $100. Well, that's not what trading is. Trading is a process, and that's what I talked about earlier. Here's my setup. Does anything tell me that setup is good? No, I'm not taking the setup. Now, here's a level from a newsletter, which that's my homework. I know that's good. Now this setup tells me to do something that's the same area. It's one tick away. All right, that's something I'm going to look at. Maybe I'll look at the order book and how much is traded there today. That's a pretty popular price in the order book. A lot of volume traded there. I got 3 things telling me I should look at that. So that process gives me a place to put something in the order book. And this 4th point here, there'll always be another trade. Again, all this stuff, I mean, a guy, and he's still on the trading floor. He told me this years ago. But and I tell myself this too. I get in a trade and I hack it up. Or I had the order in, let's say from 6:45 in the morning, and now it's markets in my mind a little different at 9 o'clock. So I pull the order, and the order goes right down to it, and it's a great trade. Well, there'll be one later, there'll be one tomorrow, there'll be one the next day. Gotta tell yourself that, because that's another thing when people fail. They miss a trade, and then they just try to invent one. Or they just, I missed it, I'm going to chase it. Doesn't work. So I maintain that if you can read a chart and use the dome, you can find the levels to trade. And in this environment, I'm making so many trades just off a 5-minute bar chart. It's not a candlestick. It's just a regular 5-minute bar chart. No indicators. I've never used one. But if you can look at a price chart, you can figure out support, figure out resistance, you can figure out targets. And the market bias, which doesn't do as much as it used to. I mean, I remember years ago, I think on the right side of the market, 8 times out of 10. But when the market when there was more flow to it, and that when the pitch was still going, that was a big deal. But it's not anymore. I mean, sure, being on the right side of the market can be helpful, but It's not like it used to be. But finding support, resistance, and targets is. Now risk management. You know, and I mean, I'm a small trader and I'm conservative. That's just how I trade. You know, I mean, it's just, you know, it is what it is. There's a certain makeup that all of us has. And I'm a small trader and I trade, I scalp. And this is what I was trying to say earlier to some of you. But the 5-year notes, you know, each movement is worth $7.81. If you buy 13 and sell 13 quarters, you made $7.81. If you sell 13 and buy it at 12 half, you made $15.63. And if you're trading 5-year notes and you risk $31.25 or 38 or $46 per contract, that's a very, very fair stop. So think about it. Well, let's say you're a 2-lot trader and you say, okay, well, if I risk 46 bucks a trade, I'm risking $100 a trade. And if I can find 4 trades a day, you know, 100, you know, and I lose all of them, you know, 100, lose $100, 100. You know, something you can, I mean, I don't want to talk like this because money is money and we all work hard for our money, but you lose $400. And most of us can handle that. Of course, ideally, you don't go loser, but that obviously can happen. Now, 10-year notes, each movement is $15.63. You buy 13s, they go down to 12 half, you're down $15.63. Goes down to 12, you're down $31.25. Goes down to 11 half, you're down 46. Okay, but a good fair stop in 10-year notes is $62. So again, you trade a 2-lot and you risk $62 and you lose $125. Now the bonds, each movement is $31.25, and the bonds are very risky. And you need a 4 or 5 tick stop to trade bonds. So you're losing $150 a trade. You know, you get short at 20, you got 25 stop, 31 times 5 is 156 times 2, you know, 300 some bucks. So you look at that and you say, and now again, you know, if you have a healthy account, you've done well trading other markets, you know, and you're looking to maybe add the treasury bond market or the bond sector to your trading, the bond market is a nice fit for you. But if you're a new trader and you want to come into this small and you want to limit your risk, the 10-year notes or 5-year notes. Seems like most people know about the S&P because I didn't trade it for years, but I started to. But the S&P is one handle. You got $25. Actually, I just started trading S&P. Someone's saying this is wrong here, $12.50, not $25. I mean, I trade it for handles. I mean, what I'll do is if I buy 13s, like today I made 18 trades and made $637.50. Guess we can figure that out. Well, I'm not good with math either. If that's wrong, that's wrong. But again, the S&P, and I'm talking mini S&P here. But if I'm buying 13s in the S&P, say 28.13, my thing is I want to try and sell 28.14, 28.14 quarter, and then I want to go for a runner. If it goes against me a couple of handles, I know I'm wrong. Starts trading 11s, you know, I'm probably wrong. I'm going to move ahead here. All right, now this is a chart, and I don't really care what this chart is. I mean, it's the S&P, but we're just talking about trying to help you guys look at a chart and figure out places that are important. I think everything comes back to price. And highs and lows and areas where it just kind of sits for a while, those are all important areas in the market. If a market is sitting for a while, it's because the big guys aren't sure what to do. Now let's see, here we go, this thing here. But, you know, I mean, obviously this high here, that high is going to be a target on any move. Now, I know we're trading above this. S&P right now is 28.30 quarter. But, you know, that high up there is going to be a target. Okay, this high here, I'm pretty sure I used today. I had 31 quarter as a key area. I wrote last night's newsletter. Today's high is 30.75. But that high right there, tomorrow on the job number, watch that high. I mean, there's no resistance there. But if they get through that high, well, there's another target up here, but it's going to go after this high. Okay, now these lows, this low and this low, I mean, those are put in for a reason. So you want to look at those lows as an important price in the market. You can take this whole crazy area from this high to this low, and you can divide it in half. See what the halfway is. The market's just been in this back and forth here. What's the halfway point? Maybe if it gets above the halfway point, it's going to go test the top. Below the halfway, maybe it's going to test the bottom. This area right here, these lows. I mean, this market breaks through these lows. Where does it want to go? It could be a little problem right here. If it gets through that, it wants to go here. Then it wants to go here. Then it wants to test that high. You know, the markets that I follow, the treasury market and the S&P sector, they like to test and retest established points. And that's just what we're trying to do here. You know, this isn't so much support as it is a target on weakness. Okay, this is a trigger for higher trade. But these things I talked about here, you know, there's some support, there's some support. Another S&P chart. And again, we had to submit these a bit ago, but you know, they came down and checked out this low, and they're just chopping higher. All right, well, draw a trend line from this high and connect this. All right, and you know, look and see where that puts you. You know, given the look of this, and again, these are older charts now because we had some a while ago, but they come out of this chop here. They want to go up here and check out this and check out this. They take out this low, they want to check out this. Okay, I mean, I think so many people forget that the market is based on price. And old highs, old lows, areas where it just sits and chops, these are all places that you can look at and know there's interest in the market in those places. what do we got? I'm going to try and close this and hope it doesn't mess anything up. Another chart, but these highs right here. I want to know what these highs are. And if the trade gets through that, then I can maybe get a little long and see if I can target that high. If we get above these highs and we're trading up in here, I want to use this as support. I don't want to use this. This could just be somebody wanting to get guys like me along. Just, you know, and you got to be cynical when you trade. All right, but they let it pop up a little bit here, all right, because they want to get short. You know, the First Boston, the Goldman, the central banks, you know, those people. So I'm not gonna use this for support. If this holds when I'm long up here, I know it's really bullish. And I'm going to try and not hack up the trade. I'm going to try and stay long to take it up to this high. But I'm going to use this when I get in the trade as my main support. What if trade takes out this low right here? Okay, this low doesn't matter here. This low here matters. What if trade takes out that low? Where's it going to go? I'll take a look at this low. I'll take a look at this low. All right, and the other thing, and we didn't get a slide in here, is the order book, the volume traded at every price. I mean, that's very helpful for you to find support and resistance. You know, the order book and especially the way it's presented in the order books with Ninja. I've used some where it's just a number, and yeah, I can look at it. Okay, they traded 45,000 there, but when it's a bar, and you can just look and see, okay, well, there's what the market thinks is important. Somebody, and I know we got to, I think, wrap up kind of soon, but there's a question, and this question kind of scares me because he says, well, the edge, where's your edge? And we just kind of discussed that for the last half hour. I mean, your edge is created by the knowledge that you have in the market. You take your chart reading skills. You look for old highs and old lows. You look at the heavy volume in the order book. Okay, do those things line up? You know, and by seeing that they're trading a lot by an old low, there's my edge. I know the old low from the chart's important. Now I see a whole lot of volume in the order book trading down there. That confirms it's important. That's my edge. Now, we did make a handful of videos yesterday, just about what we're talking about on the fly in real time in the trading room, and that's on the website. So if you guys want to go back and go to the site and look at those, you get a little more of an idea about the way we trade and just kind of what goes on in the trading room. I mean, we're not talking about a real exciting thing because of that told people. It's not my job to entertain you in there. It's my job to be another set of eyes and ears in the market for you and maybe point you out to trades that I think are good. In some cases, trades that I think are interesting but don't really fit, you know, what I'm trying to accomplish. You know, each of us has a different risk tolerance. You know, we all have different account sizes. We all have different goals. I mean, I had a friend out the board of trade in the bond pit, and his thing was to make like $350 a day. That's all he wanted to do. And go home and jump in his pool with his kids and mess around. And the other guys, if they didn't make $10,000 a day, they were pissed off. So everybody has their own risk tolerance, how much you're trying to make, how much you can afford to lose. So that's what the room is all about. Now, if anything that I'm saying in your interest, yeah, okay, contact Seth. As I said before, he's got a little more time on his hands than I do. And this is something else too. I mean, we've talked to groups before, and we've implored. I don't want to say begged, but we've begged people. I mean, and these people that they purchase something from us, and we say, look, you know, if you have trouble with it, you know, get back to us. Let us know. Let us work with you. And not one person ever did. I mean, the way, especially you guys that want education, the way you get educated is to let us try and work with you. Okay, it's to come into the situation we have and let's find a way to work together. Now, as I said earlier, you know, we're all different. And I mean, yeah, I think my time is valuable. And I think what I can offer a trader is valuable. And it's got a certain price in my mind of what it's worth. And I know talking to Sav, he put some prices together for what we're trying to do for you guys going forward. But the bottom line is we got to hear from you. Because if you look at the prices that we talked about, and you say, well, gee, I'm trying to trade a $3,000 account. You know, I mean, well, let's talk. Let's figure out a way to work with you to try and help you. But, you know, Seb's your point of contact. He and I have worked closely together to build these systems. The option trading that we use, that's a lot of his work. So we have worked closely together. So what we're trying to put out here for you is, and I'll just leave this on the screen here. There's another question. Risk exposure, how to manage your trade when it's going against you. Well, this goes back to, and there's a couple of things about it. It goes back, first of all, to what's a fair stop in the market you're trading. You know, the market doesn't care about how much you want to lose. You know, the market doesn't care. So that's where you got to look at what you're trading and say, well, what's a third of this market? Now in the S&P, it's a couple of handles. If I'm buying 13s and this starts trading 11, I'm probably wrong. All right. So let's go to that example for now, because this is where it also gets interesting with trading. Because I'll pass on trades, and I'll say it in the room, because let's look at something like this. Let's say that 13 is a place that I think the market should be able to get some legs, make another push up. So I get long at 13. And let's say that there's support at, let's say 08. So I say to myself, well, if I'm long 13 and it's trading 11, am I going to get out or am I going to buy 08? And this is where a lot of traders get screwed up. And it's probably hard to put it into words in this short of a time frame. But this is what you got to look at in trading. All right. Let's go back over that, because if you're long at 13 and 11 is where you know you're wrong, but 09 is support, maybe I'm going to skip the 13 trade, because I'm going to say, wait a minute, I can't be a long 13 and puke 11s and maybe have it bounce there because 09 support and go back up. Maybe I got to wait to try and buy 9s, and if it doesn't never pull back, I miss the trade. But the thing about going against you is you have to have looked already at the market. Okay, and again, when you trade tomorrow morning, look at your daily chart, look at your weekly chart, look at your monthly chart, look at your 5-minute chart, and look and see, is anything on these lining up and showing me a spot that makes sense for me to trade. And if you can try and initiate on prices like that, you have a better reason and probably also a better chance it's not going to go against you. It's a tough question to answer. I mean, obviously, if you get a hold of us and give us some examples of some of your recent trades, we can kind of work you through them. Or if we end up seeing you come across our trading room, you're going to see that all day long. Because believe me, there's not a lot of trades that when you get in them, they're instantly your way. I mean, most of them make you work them. I don't know how much longer we have. I'm going to keep talking until they tell me I got to shut up. But if there's any other questions.
Hey, Jack, you actually have about 5 minutes, and then we're going to have to close out, okay?
Okay, all right. I think we ran, I'm going to, well, any more questions? Because we'll go back to those charts. Look at a few more of those, because I think that's, because again, what I was trying to do here was, I think, a couple of things. I mean, letting you guys know that this is very, very difficult. I mean, that's it. I mean, and again, do I think it's, I have a client who's been trading, he was in the bond pit day one back in the 70s. And he still uses my stuff and still trades. And he joined me at a talk at a college a few years ago. And he said, every one of you should give this a try. Because you just never know. You may have an innate ability to do it. And I thought to myself, that's something I try and tell people now too, because yeah, is it difficult? It is. But if you can do it successfully, it's a fantastic lifestyle. But I want, and because those of you who have been trying it and you've been struggling, and you might think that, well, I'm using this indicator wrong, or I'm missing something, or no, you're probably not. You're probably just too new. I mean, this market, now I can't speak for gold. I mean, maybe you guys that trade gold make $1 million, and I can't speak for gold or crude or the foreign currency. I don't look at them. I trade the bond market and the S&P. And it's, the S&P has been the better trade lately. But this is just a market that the more time you have in it, and again, I take it back to an analogy like a baseball game. We're almost football season. Yeah, tonight's the Bear game. Well, I'll have to watch that. But okay, like a college quarterback who's all-American, and he's great. And then he gets to the pros, and he struggles. And now some of you guys are saying, "Oh, that's not true anymore. It's not true anymore." Well, there's still a process there. Okay, I mean, it's not like they come in and they're great their first year, But as they see more film, as they see more stuff live, as they get thrown in more situations, then they start to figure things out, and they're much more efficient quarterbacks in their third, fourth year. And you guys are struggling. I think that's something you got to look at more than it's you. All right. Well, they're gonna minimum scalp and Z, B, and ES. There's there's some setups we get. As I said earlier, there's 4 or 5 setups, and some of those give you targets. And I mean, and they can be huge. And then in that situation, you're trying to hold it for the target. Now, my thing is scalp first and go for the runner. I will say this. I really think if you're a one-lot trader, it's a losing game. I mean, I don't think you can trade with one contract because there's so much risk in the markets that when it goes your way, you got to take a profit. But then what happens? You take your profit, next thing you know, it's going, much better. You got to trade, you got to get a second contract working. Now in the bonds, if I can scalp a tick in two and then get a runner, that's what I'm going for. Now, if I have a defined target for my chart reading skills or the order book, and I'll just leave it at those two things for the sake of this talk. If I have a set target, well, then I widen that. All right, but I don't widen it much. If the target's 17 ticks, all right, let's say I buy evens and it's 17 target. Instead of selling ones and twos, I might sell threes and fours or fours and fives and then go for the runner. But that's how I trade. I'm a scalper. 10 years. I mean, you give me a tick. You give me 31, and on the floor, a tick is 31.25. That's a tick, 31.25. But you give me 31.25 in a 10-year and let me take a profit on that and get a stop at scratch, I'm doing that. A tick in 5 years. If I sell 13 halves and I can buy them back at 12 half and go for a runner, and here's what's about this sector. You got a better chance to get a runner on in 5s and 10s than you do in bonds. The bonds will come back and go back to break even more times than not. If somebody asked a question about support and resistance, I think I clicked the wrong thing here. I already scrolled by. Somebody asked, are you using your setups besides support and resistance? Well, again, remember what we're trying to do is we're trying to get a few reasons to make a trade. And again, if you spend time looking at a price chart, and again, look at different time frames. Look at what's happened this week with a daily bar chart. Look at what's happened this month. Look at what happened yesterday on a 5-minute chart. Look at what happened overnight. And you're going to see areas that keep coming back into play. And those are prices that the market thinks are important. And that's where you want to focus on. I mean, yeah, do the setups vary from support and resistance? Some do because they're momentum setups. But some are fades. And if a chart level shows me as a level above the market that the market seems to like, and the setup lines up there, I got more reasons to make that trade. The order book, I mean, I talked about that, a few times. The volume trade in the order book is huge because that's where the market people are going to look. That traded volume in the order book. And I guess all I can say is, like when we wrap this up here, look at the S&P chart this week, what it's done so far, and look at I've already lost the domes, but these are things you can use tomorrow. I mean, believe me, I am. Did I miss anything? I know they told me I had 5 minutes. I think I went too long. And I think some of the videos we made the last couple of days, because we knew this wasn't going to be a lot of time to talk about the markets. But the videos are going to show you, I think, a lot of this stuff in action. And it might give you a better idea. And there are videos of me actually referencing the charts. So you get a little bit more information then about the way I think you should look at a price chart. Oh, I can keep going. I think if Juanita throws me out, we'll wrap it up. Seb says we're going to post more videos. Yep.
We're going to go ahead and have to close out. We're just a little over time. I would definitely suggest that if anyone is interested in, viewing more information from Jack and Sev, definitely reach out to them to the email currently listed on the page. And I know they would be more than happy to go through this with everybody in attendance today.
Oh, absolutely. And I mean, I'm hoping you guys come in the room and look and check it out, because especially the education people, because that's going to be, I mean, a real key for you.
Okay. I just want to give you a special thank you again, Jack, of Broz On Bonds, for joining us today and having this wonderful presentation. NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find value in these events, we do hope that you do attend them on a regular basis. Please note, we do record all these events and send them in an email to all attendees as well as registrants, as well as we do have an archive at the following link that I posted in the room. We would like to remind you the information provided in this was that of Broz On Bonds and not of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. Again, we do appreciate the time you spend with us. Enjoy the rest of your day, and we do hope to see you in future webinars. Happy trading from all of us here at NinjaTrader. Again, thank you, Jack. Thank you, Sev. Thank you, everyone, for joining us today. Have a wonderful day.